Wait, stop scrolling. The stock market has created more millionaires than any other invention in human history. A single investment made at the right time can turn a small savings account into generational wealth. But here is the problem. 99% of investors are looking in the wrong places. They chase the same overvalued tech giants that everyone on social media is screaming about, and by the time they buy, the upside is already gone. Today, I am going to give you 5 stocks trading under $4 that Wall Street analysts are quietly accumulating. I will count down from number 5 to number 1, and I will not reveal any name until the very end of each stock. You have to earn it. Stay with me for the next 9 minutes, and by the end, you will understand exactly why these could be the most overlooked opportunities in the market right now. Let us begin with number 5. Number 5, trading at $3.76. This company owns a silver and gold project in Mexico, and here is what makes them different from every other mining penny stock. A feasibility study was completed in November 2025. That study confirmed that this project can produce 17.4 million ounces of silver equivalent every single year for at least 9 years. 17.4 million ounces every year for nearly a decade. That is not speculation. That is a government-approved, independently verified engineering study that took years to complete. They recently awarded engineering and construction contracts to M3 Engineering and Mining Plus. These are serious firms with real experience building mines in Mexico. Construction is moving forward right now, and here is the kicker. 14 hedge funds currently hold positions in this stock. That means institutional investors have done their homework. They have visited the site, they have reviewed the data, and they have decided this is worth owning. Analysts see 32% upside from current levels. The risk? Mining projects can be delayed. Silver and gold prices can drop, but with a confirmed feasibility study, construction contracts awarded, and hedge fund backing, this project is moving forward. The company is Vizsla Silver, ticker VZL, but do not go anywhere, because number 4 is completely different, and it might be safer than number 5. Number 4, trading at $3.72. This company does not mine anything. They do not dig. They do not drill. They provide financing to mining companies in exchange for royalties. That means they get paid first, before the miners see a single dollar of profit. It is the safest way to play the mining sector without taking operational risk. In the first quarter of 2026, they reported record revenue of $7.2 million. That is up 132% from last year. They posted net income of $1.8 million, compared to a net loss of $1.2 million a year ago. And they have zero debt. H.C. Wainwright just raised their price target to $7.75 with a buy rating. That is 66% upside. The risk? If the mining sector crashes, royalty revenue drops. But with a clean balance sheet, growing revenue, and no debt, this is one of the safest bets on this entire list. The company is Gold Royalty Corp, ticker GROY. Stay here, because number 3 is completely different. This one is about money moving, billions of dollars. Number 3, trading at $2.58. This company processes payments, personal loans, auto finance, B2B transactions. Every time someone borrows money or makes a large purchase, there is a high chance this company is handling the payment behind the scenes, and they just made a massive move. They announced a $372 million all-cash acquisition of Kubra Data Transfer. This deal expands their bill payments business significantly. We are talking about utilities, property tax, rent, tuition, every recurring bill you pay every month. The combined company is expected to process over $130 billion in annual payments. Let me say that again, $130 billion every single year. By 2028, management expects this acquisition to increase free cash flow by 25% and reduce their debt leverage from 4 times to less than 3 times within 18 months. 71% of covering analysts rated a buy. The consensus price target is $7. That is 171% upside from where it trades today. The risk? Integrating a large acquisition is never easy. Competition in payments is fierce. But at $2.58, the market is pricing in none of this upside. The company is Repay Holdings, ticker RayPay. Do not click off, because number 2 could change the lives of millions of people. Literally, number 2, trading at $1.47. This company is developing gene therapies for rare eye diseases that cause blindness. We are not talking about common conditions like nearsightedness. We are talking about retinitis pigmentosa and Stargardt disease. Genetic conditions that have no cure right now. Patients slowly lose their vision, and there is nothing they can do about it. Until now, in the first quarter of 2026, this company reported revenue of $1.53 million. That does not sound like much until you realize it beat analyst estimates by nearly 400%. They just completed enrollment ahead of schedule into late-stage clinical programs, one for retinitis pigmentosa, one for Stargardt disease. Both programs are fully enrolled. Both are moving toward FDA submission. Last month they announced a $115 million convertible notes offering to qualified institutional buyers. That means big money is stepping in. Institutions do not throw over $100 million at a company they have not researched thoroughly. The risk? Clinical trials can fail. Biotech is binary. Either the drug works and the stock skyrockets, or it fails and the stock craters. There is no in-between. The company is Ocugen, ticker OGNN. Now, number 1, the most interesting stock on this entire list, and the reason you stayed till the end. Number 1, trading at $3.32. This company uses artificial intelligence to discover new medicines, not traditional lab work, not trial and error, actual machine learning models that analyze millions of biological data points to predict which drug molecules will work in humans before they ever enter a trial. Think of them as applying the same AI revolution that gave us ChatGPT to the problem of finding cures for diseases. They ended the first quarter with approximately $665 million in cash. That gives them a runway all the way into early 2028. Most penny stocks would kill for that kind of balance sheet. Most penny stocks have less than a year of cash. This company has nearly 2 years. Recently, their CEO reported strong execution across their portfolio, including encouraging safety data from their lead program. JP Morgan maintains an overweight rating with a price target of $10. That is 200% upside from current levels. The risk? If their AI platform fails to produce approved drugs, the stock could go to zero. This is a binary bet on technology. The company is Recursion Pharmaceuticals, ticker OXERX. Before you go, a quick and serious disclaimer. Nothing in this video is financial advice. Penny stocks are extremely risky. You can lose your entire investment. Some of these companies have no revenue. Biotech trials can fail. Mining projects can be delayed. Do your own research. Consult a professional. I am just a person on the internet. So here is the bottom line. 5 stocks, counted down from 5 to 1. Vizsla Silver for precious metals with a confirmed feasibility study. Gold Royalty for royalty income with zero debt and record revenue. Repay Holdings for payment technology at a massive discount. Ocugen for gene therapy with 2 late-stage trials fully enrolled. And Recursion Pharmaceuticals for AI-powered drug discovery with $665 million in cash. You made it to the end. That means you are serious about finding opportunity before the crowd. Smash the like button. Comment the number of the stock you like the most. Is it number 5, 4, 3, 2, or number 1? And subscribe right now. Hit the bell, because my next video is another countdown, and trust me, you do not want to miss number 1 on that list. I will see you in the next one.